Hello friends, I am Sunil Singhania, CIO Equity Investments at Reliance Nippon Mutual Fund. Today we are going to talk about the Reliance Mid and Small Cap Fund. As the name suggests, this fund predominantly invests in mid-cap companies. Thus, around two-thirds of the fund's corpus approximately is invested in the mid-cap segment. We also have the flexibility of investing around 20% of our corpus in small-cap companies. This is to benefit from companies which are still not reached the mid-cap status but have the ability in them to grow much faster and reach there. To benefit from the market volatility and to capture the market beta, we also have the flexibility and we normally invest around 10% of the fund corpus in large cap companies. To sum it up, it's a predominantly mid-cap fund with around two-thirds of the corpus invested in mid-caps and the balance divided between the small cap and the large cap to benefit from the smaller companies and to provide stability to the fund. For successful mid-cap investing, there are prerequisites. One needs to have a strong internal research capability. We need to have more number of people because you'll have to cover a larger number of companies. And also you'll have to have an experience because mid-cap investing is all about knowing how the companies have performed in different stages of life. We believe that Reliance Mutual Fund has all these prerequisites. We are a 35-member strong team on the equity side, comprising of fund managers, research analysts, quantitative analysts, macro analysts, and dealers. We internally track almost 1100 companies, of which 450 companies we have detailed models. We believe that mid-cap investing, we need to start tracking each company and sector from an early stage, and that is where this coverage of large number of companies with large number of people really helps. We also have one of the most stable teams. Most of our senior guys have been with us for over 10 years. And more importantly, I think it's a cohesive team with a cumulative experience of almost 350 plus man-years of tracking Indian stocks. All this makes us, we believe, a very potent team to cover mid-caps very profitably. So what is the investment strategy of Reliance Mid and Small Cap Fund? As is true for all mid and small cap focused fund, the investment strategy relies on bottoms-up stock picking. We are in an emerging economy and niche plays or niche sectors obviously are a key focus. We also believe that management quality is of paramount importance. So whenever we come across a stock or a sector which offers great opportunity as far as growth is concerned, the other key focus is on management quality. We also are not shy of looking at stocks which are trading at deep discount to their intrinsic value. So bottoms-up stock picking with a focus on quality and a mix of growth and value. That is how we would sum up the investment strategy. Let us now see how the fund is currently positioned. India, as you all know, is on the cusp of major recovery. We have seen the government going on the front foot and even big reforms like GST bill have now seen the light of the day. We have also had the fortune of decent monsoon and with interest rates also coming down and foreign interest in India rising more than any time we have seen before, we now believe that India is on the cusp of a massive spending and capex. Therefore, we have positioned this fund to benefit from that recovery. However, at the same time, we want to ensure that we are invested in companies which have decent balance sheets, and therefore we would like to play more the operating leverage rather than the financial leverage. Among the capex side, we have investment in cement with companies like Birla Corp. We also have investment in multinational companies with great technology on the capex side like Alstom and Honeywell. Therefore, to sum it up, capex is a big theme. However, focus is on companies with great balance sheets. Our next theme is niche plays, and we are bullish on the financial services side, but we believe that niche financial services would be better plays. And therefore, our focus is on small microfinance companies on the gold side like Muthoot Finance. We are also very positive on the wealth management, life insurance, asset management side of the business, and therefore we have investment in companies like Tube Investments and ABNL, which play the insurance segment indirectly. Among the other niche plays, we have exposure to companies like CARE and MCX. As I said, we believe that these are niche financial services and the potential for them to grow faster than within the overall financial services space is very high. We were early entrants on the chemical space. We have decent exposure on the chemicals segment. through our investments in UPL, through our investments in Atul, and we believe that India again has a great advantage as far as this space is concerned, and our view is that eventually chemicals would be what pharma was, say, 7-8 years back, and therefore we have a big overweight as far as the chemicals is concerned. The next theme which we like and which we are playing in this fund is the urban discretionary theme. Again, our view is that India has a big middle class population. India has a young population. As the economy recovers and the benefit of the pay commission as well as the OROP comes into play, there is going to be a surge in urban consumption. And we are trying to play that through our exposure in Indian Hotels and United Spirits. The top 10 investments of the fund as of 31st July are mentioned here. Please feel free to visit our website to get the complete portfolio or get in touch with your relationship manager. With your support and good wishes, the fund has done reasonably well over the last so many years. Over the last 5 years, as you can see, the fund has returned a compounded 20% year after year, vis-a-vis the benchmark of 12%. Also, since inception, which is in 2006, the fund has almost quadrupled. In short, 1 lakh rupees invested in 2006 has grown to 3.7 lakhs as of today. The endeavor going forward would be to maintain this performance and try and not only beat the benchmark, but also be there among the best as far as the peer group is concerned. In conclusion, friends, mid-caps will always have phases of overvaluation and undervaluation. There are phases when a few mid-caps get into the over-exuberance territory. However, as seasoned, experienced investors, our endeavor would ensure that we don't get carried away by exuberance in some stocks or sectors and keep on rebalancing our portfolio based on the valuations and the future outlook. Mid-cap investing, as I mentioned earlier, is all about single stock or bottoms-up stock picking, and that is where our focus would be. And looking at our experienced and a well-balanced team, we believe that we are well positioned to make the most out of this big opportunity. Thank you for all your cooperation and good wishes.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.